Welcome to the Tearsheet podcast, where we explore financial services together with an eye on technology, innovation, emerging models, and changing expectations. I'm Tearsheet Editor-in-Chief, Zach Miller. Joining me today is Peter Renton, CEO and founder of Renton Co, Fintech consulting firm specializing in media, thought leadership, and event support. You may know Peter, like I do, as the chairman and co-founder of Fintech Nexus, formerly known as LendIt Fintech, a diversified media company providing essential knowledge, connections, and inspiration to the entire financial services industry before it closed down in June 2024. Peter's been writing about fintech since 2010, over 2,500 articles, and is the author and creator of the Fintech One-on-One podcast, the first and longest running, we may give you a run for your money in that one, fintech interview series. Welcome to the podcast, Peter. One of the OGs.
Thanks, Zach. Yes, I know you were right there with me in the early days.
Well, so let's go back to the early days. Man, I think one of the things I appreciate so much about you, Peter, is that I feel like as fintech has matured, you've been early each time to like where the trends are starting. I think you're able to spot it and somehow marshal resources to take advantage of it. LendIt was a seminal event in the maturity of U.S. fintech for sure. You went to China early on. I remember you really had your finger on the pulse. So take us back to when the concept came up to create LendIt and sort of the storyline there.
Well, it really started back in 2010 when I decided that I was an investor in peer-to-peer lending with Lending Club and Prosper, and I thought this was a great idea, and no one was really writing about it. So I wrote about that from an investor perspective and built up a following. In fact, I think while I was doing that was when we first connected, probably like
you were doing great work on that space. Yeah.
Oh, thank you. So, but from that community, we had a community of investors. Mainly individual, but there started to be more and more institutional investors who were interested in the space. And people kept on saying, you should start a conference focused on the lending space. So that's what I did, and started that in January of 2013. And as you say, we were probably a year too early, but it was great because it was just getting going. The first event was crazy and packed. We thought we were going to do 150 people. We ended up with 350 and another 75 people we had to reject because it was just the room was going to be too crowded. But that was kind of the beginning of the innovation in lending. And as lending was going online, we kind of got that right at the beginning, and then from there, we sort of built that business, built the conference business up to like 5,000 people, and at convention centers, and we sort of rode the wave of the innovation in lending. And then we could see, like, it was companies like SoFi. That was, I'm very proud to say that we were SoFi's first marketing expense at an event in 2013, when tried to convince Mike Cagney to spend $5,000 with us. And he said yes eventually. But SoFi were really one of our core sponsors from the early days. And then they were moving into other areas of fintech beyond lending. And we thought, okay, that's interesting. And then other companies like MoneyLion started to do things outside of lending. And so we thought, we can't be left behind here. And we really did this from a lending perspective. Let's move into other areas of fintech like these other companies are doing. And then eventually you had Lending Club doing banking and what have you. So we expanded beyond lending and started it in 2017 and really got going in 2018, 2019, where we became a real fintech event, which is what ended up leading to the name, the rebrand. But that was sort of how we kind of grew that conference.
And in a way, the way you're describing it, Peter, it sounds like it paralleled the evolution of fintech in and of itself. So maybe you started with peer-to-peer lending, which became marketplace lending, which became digital lending, and then became sort of integrated financial services beyond that, right? So it really sounds like the event broadened its scope to go where the market was.
Yeah, exactly. And what we saw Money 2020, that Money 2020 started a year before us. And, I went to the first Money 2020 and several after that, but we watched that grow, and they were coming at it. Originally, Money 2020 was just a payments event.
Payments,
focused purely on payments. And and they expanded into other areas of fintech. And so we were we were in different parts of the year. We started, we weren't in Vegas, but we really were coming at it from lending. They were coming at it from payments, and we eventually both started expanding. But still, even in our last event in 2023, we still had half of our content was focused on lending. We still considered ourselves the largest lending-focused fintech event. And whereas Money 2020, I think, again, you still find a lot of payments there, but they are fully diversified fintech event these days.
So even though both you guys became broadened your scope, how much overlap do you think there was between those events, those big events? Because there's only like 2 or 3 of them in the space. Do you think there was significant overlap between those events?
There was definitely some overlap.
Mm-hmm.
There was definitely some. We tried to differentiate ourselves. Like we said, we were always either in New York or San Francisco. So we're either where the money was or where the tech innovation was,
right.
And so that was a differentiator. And we also, we were a small business. We didn't have a public company backing us. We tried to kind of, you could always come speak to the owners of the company when, with sponsors and what have you. So we really tried to kind of create that more family atmosphere.
I definitely remember you walking the floor at the Javits Center.
The opening remarks. Yep.
Yeah.
Yep. And I would do that, and I was always the MC on the keynote stage. It's what I enjoy to do, and it worked out well. But yeah, I feel like there became more and more overlap as time went on. But because we were in the spring and they were in the fall, people kind of went to both. I mean, we'd survey, our audience, and most people went to Money 2020 and LendIt or Fintech Nexus, and so that became kind of we in some ways we were complementary, because it's good to have a big event in the spring and a big event in the fall for the sponsors to kind of fill their lead pipeline, and now obviously we sold the Fintech Meetup, so Fintech Meetup is now in the early part of the year, and there's 2 events. They both happen to be in Vegas, but there's still 2 events, and I think it's good for the industry to have 2 kind of marquee events, at different times of the year.
Yeah, because I mean, Tearsheet, we've always taken a much different approach. We've done much smaller, more intimate events. And the gulf between doing an event at our size versus getting a marquee event, as you're describing it, is huge. And as you mentioned, you need deep pockets. You need a big company behind you. How has the event business changed, particularly in fintech, since you got into the space?
So I think there's a couple of things that have changed. I think obviously there's there's not many big events because it's really hard to do a big event. And as you say, I mean, like the pandemic almost killed us. I mean, we didn't have money backing us. All of the money that we had in our bank account and savings, it all went out the door in 2020. So we were down to nothing. Literally, we had like 4 figures in our bank account at one point, and we needed both PPP loans. So, but anyway, we feel like there's not many large events because it's really hard to scale. Mm-hmm. There's a lot of smaller events, but one thing I've noticed, particularly in the last year, is what you're seeing in the event space is more and more companies doing their own small events. Like I just in the last this month, I went and I spoke at the Nova Credit event, which was based on cash flow underwriting, the Cash Flow Underwriting Summit. Then the very next week, Unit had an event called the Unite Summit, focused on embedded finance. So, Spring Labs is doing one in October that is focused around like AI and compliance. And so that's the thing that's different. That just didn't happen. Even pre-pandemic, you didn't see these companies do their own events. I mean, occasionally you do like the really big companies would do, like a user event. And obviously Salesforce has had a massive event for a long time. But what we're seeing now is fintech companies more and more, and I've been talking to others that are looking at, they're considering this or looking at launching just an event in their vertical. And so, and it's a lot less work and a lot less risk to run a 250, 200 person event than it is to run a 3 or 4 or 5,000 person event where you've got to basically put 7 figures down before you can even start marketing the event. So,
it's great for the companies if they can put those together. Right? I mean, they get to build their their event around themselves and their space.
Exactly. Yeah. And I think you'll find that like Nova Credit and Unit were both very pleased with their events. It's sort of, and it wasn't, and they both did a great job insofar as it wasn't a sales pitch for the company. There's a temptation to make it that, but in neither instance was it like that. And I know the Spring Labs one's going to be the same. It's really getting the thought leaders in the room and letting them speak their mind, and that's kind of, I think, the best. It's the best thing you can do, because people know when they're being sold to and they don't appreciate it, and you can still it's still a sales tool, because suddenly you're associated with this. Particularly if you do it well, and it's not easy to do well, but if you do it well, you suddenly have it raises your brand profile without actually trying to do any direct selling.
I know it's a little bit different model, but I went as a CMO of fintech companies in a previous incarnation. I went to the first user conference for HubSpot, and I think Martha Stewart was there,
right.
And they had thousands of people in the room. So not only they didn't have to sell themselves, but it was almost like a cult meeting, because we were all there, as users of the software, and it was really to get us excited about the capabilities behind the company. It's a different model, but it was like, 10, 15 years later, I still remember those experiences. It was like Martha Stewart was, made green smoothies on stage and they handed them out to everybody. And it was this feeling that we're all in this together. And it created incredible loyalty as well to the brand.
And it's funny, because that's how we kind of felt like when we started. We had, people because we were just a startup getting going, and we were, particularly when you're starting at the ground floor of an event or even something like that, we had a tremendous loyalty with our audience. It's harder to maintain that once you get really big, but we went from 350 people to 1,000 to 2,500 to 3,700 to 5,000.
Wow.
In that process, people had a lot of pride in saying, "Well, I've been to every LendIt event," and we would recognize these people, gave them special deals, and to this day, I still come across people that say, "Oh yeah, I went to everyone since 2014," and that, I think, is having this whole loyalty. And if you've got people who love your product, whether it's an event or whether it's marketing software, you can really. There's something about coming together in person with everyone really with the same mindset, with the same kind of attitude, and it can become very infectious, and it can become a little cult-like in the end.
It sounds like what you're also saying, Peter, is like, there's room in fintech, even at its smaller size today, for a couple marquee events, and then a lot of room, it sounds like, for some of these smaller, more flavored, more nuanced conferences as well, right?
For sure. I think there's always going to be room for small events, because you've got a really narrow targeted market, and people like to go to the big events where everyone's there, and the smaller events where they can really sit down with people and find the people that are important. So that is certainly, I think, always going to be a market. I also think there is still an opportunity to make a large event, because right now both of the large fintech events are in Vegas. And some people love Vegas. Personally, I dislike it.
I hate it.
It's one of the reasons why we never went there. But there is room for an event outside of Vegas, whether it's in New York or San Francisco or Miami, somewhere else. I think there could be another large-scale event that could come in and take, not necessarily take market share, but take people who say, right, I'm only going to Vegas once a year, so I'll choose Fintech Meetup or Money 2020. Oh, but I'll go to Miami for this or New York for that. So, I mean, there's still an opportunity for sure.
Right. Vegas definitely feels like a pilgrimage, and you have to have the dedication and the commitment to getting out there monetarily and time-wise. And Just on this show this year, we've been speaking to a lot of people. And energy-wise, yeah. A lot of people saying, years past we sent dozens of people, but this year we're just sending, 2 or 3 people. They have cut budget. They're being very surgical about who goes and why they're going. And I think partly that's the plus and minus going to Vegas, right? So if it was on the coast, I agree with you. I think they might be sending more people if it was an easier and shorter trip.
Right. Particularly what we would find is that when we had it in New York, and we would find that you would get a lot of the local people, the local
right.
banks,
yes,
they would local fintechs, they would send 20 people because it's no travel cost involved, and
right.
You just say, right, just go check it out. Whereas Vegas, it's a commitment, and I'll be interested to see, because Money 2020, is coming up at the end of October, and that. I'll be very interested to see how that feels as far as crowd size, because I know there's what you've been saying. There are people are cutting budgets, being a lot more careful with how they manage their event. Having said that, they seem to have. There's a huge number of sponsors they have, so people there's still money to spend out there, but they're just being a little bit more careful, which is fair enough. You should be getting ROI from every event you go to.
And if you're listening, I don't know if you'll be there, Peter, but Tearsheet has a working group of PR and comms folks that will be meeting up Wednesday morning, which seems to be the PR comms day in Vegas this coming in October.
Yeah, I'll be there.
Great. Stop by. What are you doing now, Peter? So you exited the business in June. Tell us what you're up to now.
Sure. So we shut down Fintech Nexus, which we'd sold the events piece to Fintech Meetup. We'd kept going with the digital media,
piece, right.
Which was really basically webinars and white papers and email advertising. That was, we just couldn't make the economics work. It's
not easy running a media business.
Yeah, it's hard.
Yeah.
So we shut it down, and then I took a few weeks off, and it was just so great to have the summer without any major work hanging over my head. Just had a really relaxing summer, and then launched my own one-person consulting company, Renton Co. And what I do, I help companies with fintech media and events. I'm not a PR agency, but if you want to do, I'm doing some work with MoneyLion we just announced this week the first in the executive interview series. We've got Renaud Laplanche on with Dee Xiaobei from MoneyLion. So we're doing an executive interview series for them. I'm helping some of these companies that are doing these tiny events. I'm helping them either help with their agenda, just become sort of a Q&A person to help. The trouble with these events is if you've never done events before, there's a lot of things that can sort of slip through the cracks. So helping companies make sure that doesn't happen. I'm also helping companies increase their the awareness in the industry. I'm really hooked in. I know pretty much everyone who runs a newsletter or a podcast, and just helping them navigate that landscape, helping them kind of just raise their profile, doing that with several different companies, and then just writing thought leadership pieces. I don't write as much as I used to, but I would like to get back into it. And there's a couple of companies that have hired me to do some thought leadership pieces as well. So it's a lot of fun. Really, still totally engaged with fintech. I love it as much as I ever have, and really enjoying this new chapter, which is very different. I didn't realize how much stress there was running an events business, and then even running the digital media business, where there's always another webinar, there's always something coming. You always got to be working towards.
It's incessant.
Filling up your pipeline. It's incessant.
You ship, you publish, and you're on to the next one. That's I tell my reporters all the
plus
time.
I know you do a daily newsletter. We used to do a daily newsletter, and I was the editor of that newsletter for several years, and even that, every morning, I know I had to sit down at 8 o'clock and produce a newsletter. Yeah, there's a deadline. And
that is stressful.
Not having that, I'm having less stress than I've had in more than a decade, and I'm just still engaged in fintech, meeting with companies who want to hire me, and it's been a fun ride so far.
It sounds awesome because it sounds like it's not really a departure from what you were doing before. You're just taking all that experience and knowledge and connections that you have in the space and spreading the love with other companies, bringing that to them.
Yep.
Yeah.
Exactly. And that's one of the things that I've found is that what I thought people would want is sort of my like event expertise or whatever. What people actually really want is my access to my network and connections and I'm being very judicious with that. I'm not like blasting out emails to my whole network, but I am doing, I'm doing certain pieces where, that someone says, I really want to meet, I want to meet like VCs, or I want to meet the some senior bankers who are looking at embedded finance, whatever it is. That's the thing that is just as valuable, if not more so, than the expertise.
Totally agree. In the time that we have left, I'd love to hear sort of what you're finding interesting in the space today. Like, where are some of the opportunities for fintechs, both in new company formation, or where are the opportunities? I know, like 3 years ago, if we'd had this conversation, to me, blockchain would be, top 3, top 5. We don't seem to be talking about a lot of blockchain nowadays. Where do you find the interest?
Well, I think without doubt, the most interesting space in fintech in 2024 is the banking as a service space, because it is really going through an incredibly challenging time. But because of the way the banking system in this country is structured, we need banking as a service, and it's not going away. There's just no way that we're going, like, suddenly there'll be no fintechs working with banks. That's just not going to happen. But we are seeing, we've had the FDIC come out with some new guidelines, and there is going to be some new rules and regulations put in place. Which is understandable given the challenges that some people have had with their fintech partner, with the bank partner, part of the Synapse collapse.
Right.
But so I think banking as a service is most interesting, and I think there's still opportunities there. I really believe, particularly from the community bank perspective, they're doing this well. In community banks, if you want to grow your community bank, it's really hard to do that geographically now, based on your region. But if you open up a BaaS line of business, there's ways you can really grow your bank. And we've seen many success stories. We've seen many horror stories as well. But the one thing that's really good about, if there's a silver lining for what's been happening this year, is small community banks getting into this in, say, 2025 or 2026 are going to know the rules of the road, and they're going to have a lot more chance of success. So I think that's still an opportunity that will continue. And, with that, I would say embedded finance and banking as a service is really a branch of embedded finance. But I think embedded finance, where we're bringing fintech into non-financial companies. Like, I love the work that Pipe is doing, what Luke Voiles, who's taken over as CEO there, going into vertical SaaS companies that aren't fintech companies and just plugging in a small business lending facility and helping them grow their revenue, grow their their relationships with their customers. You're seeing it in payments, obviously, with all the PayFac as a service. So if you're a vertical SaaS company today and you're not making revenue from payments and revenue from lending, you are behind the curve, and that's something that's going to continue to grow. I think. Then obviously there's deposits where you can interest rates are going down now, but there's still opportunity, I think, for the embedded deposit market to grow. And then the other area that is really interesting and where there's massive opportunity is open banking, because we're going to see hopefully in October, the CFPB coming out with their new 1033 open banking rules. And that, that's going to be a moment in time, but then that's going to be in place, and it's going to, again, people are going to understand the rules of the road. The open banking landscape is going to mature, and I think there's massive opportunity once that gets going. And I think when all the data, when your data becomes yours and it becomes more portable, I think there's going to be a wave of new fintech companies that are going to kind of use that and take advantage of that, and we're going to see more innovation.
I totally agree with you. both in your choice of where you're finding opportunity, but also how new regulation or more clarity around regulation, well, even though it's in the short term, it's painful to some extent, it will set the groundwork for future innovation because we know what the rules are. We know where the opportunities are better. Yeah, I totally agree with that.
Exactly.
Peter, where can people find you if they want to learn more about what you do?
So it's Renton, and that's AND.co. My email is just peter@rentonand.co. You can always find me on LinkedIn and Twitter. I don't hang out on Twitter that much anymore. I really focusing most of my attention on LinkedIn. It's Peter Renton. You can just search for me. There's several Peter Rentons, but I'm the only one in fintech. So happy to connect with anybody.
Peter, thanks for coming on the Tearsheet podcast and really great catching up with you.
My pleasure. Always great to chat with you, Zach.